Hey everyone, welcome back to Corporate Decoder. Today, R.P.A.Y just filed an 8K, and I am seeing a clear signal about their outlook for 2026. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is sharing some early numbers for 2026, and it gives us a peek into what they expect for the year ahead. So, what we have here is a current report filed on a company's ledger. With the SEC, it is essentially a way for publicly traded companies to announce major events that shareholders should know about. In this case, R.P.A.Y Holdings Corporation, the company behind the ticker symbol RPAY, is giving us a heads up on its financial condition and results of operations. The date here is the 27th of April 2026, which means they are reporting on preliminary results for the quarter ending the 31st of March 2026. This filing is all about R.P.A.Y Holdings Corporation. We know from recent headlines that R.P.A.Y has been in the news lately, with some positive notes about their margin outlook for 2026, partly due to a partner buyout that helped their first quarter. This filing comes out right alongside that news, so it's important to see what the company itself is saying. R.P.A.Y's stock is traded on the Nasdaq under the symbol R.P.A.Y. They also have these preferred stock purchase rights, which are usually put in place to protect shareholders from hostile takeovers. The fact that its class of common stock is listed on Nasdaq is standard for companies of this size, and it means pretty much anyone can buy or sell shares. The main event here is under item 2.02, which deals with the company's performance and financial health. R.P.A.Y announced some preliminary results for the first quarter of 2026. Preliminary means these are not the final audited numbers yet, but they give us a snapshot of how the company is doing. This is usually done through a press release, and in this case, the press release is attached as an exhibit. This press release is the heart of the filing for us today. While the filing itself doesn't contain the numbers, it points us directly to the press release where those preliminary results are detailed. Think of the 8K as the official notification and the press release as the explanation. The company is sharing these numbers publicly because they are material, meaning they are important enough to influence an investor's decision. Now, if we had the actual press release, we would be digging into specific revenue figures, profit margins, any changes in customer numbers, and how these compare to the same period last year. We would also look for any forward-looking statements about their expectations for the rest of 2026. For example, if they mention a significant increase in revenue, we'd want to know if that is coming from new products. More customers or price hikes. If they talk about improved margins, we'd want to understand if that is due to cost cutting, better efficiency, or a shift to higher profit services. Given the news that R.P.A.Y is raising its 2026 margin outlook, this preliminary report likely contains details that support that positive spin. We would be looking for explanations of how the partner buyout they mentioned is contributing to better profitability. Perhaps the buyout allowed them to integrate operations more efficiently, reduce duplicate costs, or gain access to more profitable customer segments. Consider this: companies like R.P.A.Y operate in the technology and software infrastructure space. Their business often relies on processing transactions and recurring revenue streams. So when they talk about margins, it's not just about making more money on each sale, but about the underlying health and scalability of their business model. A stronger margin outlook suggests that their core business is becoming more robust and profitable. Let's think about this from an investor's perspective. If R.P.A.Y is projecting higher margins, it means they expect to keep more of each dollar they earn. For a company with a market cap of around $320 million and roughly 486 employees, this is a significant indicator. It can translate into more money available for reinvestment in the business, paying down debt, or potentially returning capital to shareholders through dividends or buybacks. The headlines also mention M&A activity. Mergers and acquisitions can be a double-edged sword. On one hand, they can lead to synergies and growth. On the other, they can come with integration challenges, restructuring costs, and potential disruptions. So, the fact that R.P.A.Y is seeing positive results from a recent buyout is a good sign. It suggests they've managed the integration well and are realizing the expected benefits. We also saw a headline about the company's stock falling on Q4 2025 earnings. This filing is about Q1 2026. So it is a chance for R.P.A.Y to potentially turn the tide and show investors that the previous dip was temporary or due to specific one-off issues. This preliminary report could be their way of signaling a stronger start to 2026. And here at the end, we see the signature of Robert S. Hauser, the Chief Financial Officer. His sign-off on this report, acting on behalf of R.P.A.Y Holdings Corporation, signifies that the company is officially submitting this information to the CSE. His role as CFO means he is responsible for managing the company's finances, including reporting these results, and his endorsement adds weight to the information being presented. Overall, this 8K filing, by referencing the press release, is RPAY's way of communicating its early financial performance for 2026. It is a crucial step in managing investor expectations and providing transparency. The context from recent news suggests a focus on improved profitability, and this filing serves as the official announcement of those preliminary results. The key takeaway is that RPAY is signaling a positive trend for its margins in 2026, likely driven by strategic actions like the partner buyout mentioned in the headlines. This suggests the company is moving towards a more profitable operational model. What I am watching for is the detailed breakdown of how these margins are improving. Is it through increased revenue per customer, better operational efficiency after the buyout, or a shift in their service mix towards higher margin products? The fact that they are raising their outlook is definitely a positive signal, especially after a recent dip in stock performance. It suggests a potential turnaround or a strengthening of their core business. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if you found this valuable, like, subscribe, and join our Discord.